Hi, everyone, and welcome to today's webinar, Gold and Silver 101. I'm Machi Block, Senior Director at American Hartford Gold. We're the nation's largest precious metals dealer, and for over a decade, we've been helping countless numbers of Americans like you and I to sort through the noise in the market and to protect their retirement savings with physical, tangible gold and silver. And today, I'm going to walk us all through exactly how you can invest into precious metals, either through a cash investment, where we ship gold and silver right to your home, or through a qualified retirement account where you can actually invest into physical, tangible gold and silver right inside of an IRA. And I'll also walk through exactly why you should invest into physical gold and silver in today's economy. And so we'll look at things like the current risk in the stock market, the devaluation of the dollar that's happening, the inflation problem, soaring government and global debt, and then how traditional diversification just isn't really cutting it in today's environment. And so we'll break down the economic landscape, how you can invest into precious metals, why you should, and we'll help you get to know our company and, of course, why American Hartford Gold is the right choice for you when you're looking to invest into gold and silver. And so just take a minute. We're going to let some people get settled in and a few more people join the stream. And while we wait, if you would write a comment, let me know where you're watching from, whether or not you've bought gold and silver in the past or if this is your very first time. And then also, if you've joined us on a previous webinar, it's great to know who's here. Recurring, we do this every month, just trying to break down what's going on in the economy, where gold and silver are headed, and give you a good sense of what's up ahead. So great to have you here again if you've been with us before. And also, please let me know what brings you here today. Is there something that you're seeing in the economy that has you looking at precious metals specifically? Or is there something that you're joining us for, hoping that you're going to learn? So great to hear from you. We have quite a few joining us today. We've got Charlie, Teresa, David, Ralph, Patty, Hamid, all over the country. So yeah, really great to have you guys. Michael, Kathleen, Peter, Barry, first time. Great to have you. Susan from Chicago, bought silver before. Okay, so a handful of people here for the very first time, obviously. Some people who have a little bit of experience with gold and silver. And again, before we get into the heart of today's webinar, I'm Machi Block, Senior Director at American Hartford Gold. And my job here really is to help people like you and me to gain an understanding of and to invest into gold and silver and precious metals. And so, of course, today I'm excited to walk you through the essentials of owning physical precious metals and why they really are such a crucial cornerstone of any well-built portfolio in this current economy. And that's no doubt why you're joining us today. In our opinion, it's more important now than ever before to understand how gold and silver can serve as your financial safety net. And so whether you're a seasoned investor or you're just beginning your journey, our goal today is to provide you with clear and actionable insights on how to secure your investments with gold and silver, and then, of course, why you should as well. Now, at any point in time during this webinar, if you want to chat directly with our account executives, you can call the number in the message box. It's 866-607-2447, and you can have a much more in-depth and specific conversation where we do have account executives standing by ready to help you. You can also leave any questions that you have in that message board, and I do have moderators that are helping me. They're sending me your messages periodically, and we'll take some time later to address all that. And if you do have a very specific question, you might get pulled into a side chat just to answer that question more one-on-one with you, so keep that in mind. And then anything that you write is very helpful for us to know how to tailor these webinars in the future. And so if you do have a question, even if you think I'm going to cover it, just go ahead and ask it. It's just a good sense for us to know where you're at and what's important to you as you watch this. And then it's important to remember that this is not financial advice. I don't know your specific situation. I can't give you advice for exactly where you're at, but I can give you a good sense of what's happening in the market, why our clients are buying gold and silver, what some of the larger ships in the financial markets are saying about the economy and where things are headed. And so I'll do my best to disseminate that to you so that you can make the best decision for yourself. And it really is great to have you all here with me. So thank you for joining us. Okay, so yeah, again, first timers, never bought before, wanting to learn about diversifying and managing your account. Great. We're going to go through all that. You guys will really get a good sense of this as we go forward of how to invest into gold and silver, whether that be through cash investing, where you can get gold and silver right to your home, or if you have a retirement account. The majority of our clients have the vast majority of their net worth tied up in old 401ks or IRAs. It's just where we tend to stack wealth throughout a lifetime. And there's a lot of risk there, especially with the current economy. And so if you're looking to diversify inside of a retirement account, it's a very easy thing to do with American Hartford Gold. And I'll walk you through exactly how you can do that. But before we get into that, I think it's really important to set the foundation of why gold and silver. What's going on in the economy and why are people looking at precious metals right now? If you've been buying for a while, you know why you're looking at it. But if you're new here and you're just starting to kind of realize the concern that we all have with what's going on out there and you're looking for a way to diversify, you may not know the ins and outs of why gold and silver. And so we want to cover that as well. So, if you really, again, have not been paying attention, you might not know how gold and silver have been performing lately. But to put it very simply, we're in a structural bull market for gold and silver, which just means that we're in a long-term upward trend that usually lasts for, a handful of years or it could last decades, and is driven by deep economic shifts. And there are fundamental issues within the economy that are continuing to push gold and silver up for the foreseeable future until they get resolved. So when you hear a structural bull market or a secular bull market, that's exactly what that means, that there's these things in the economy that are not going away. They're fundamental driving forces that are pushing gold and silver up. So it's not a blip. It's not just excitement. It's not hype. There are real things in the economy that are causing gold and silver to grow, and they're growing for the foreseeable future. So these issues are things like inflation, the devaluation of the dollar. You're watching your purchasing power just erode away. There's money printing from the government, of course, increasing government debt. There's inherent stock market risk right now, geopolitical turmoil, and political turmoil and uncertainties, even here at home. And so last year, gold was up 64% and silver was up 142%. Now, when you compare that to the average stock portfolio, which did roughly 12 to 13% last year, we immediately see that something is amiss. Gold and silver don't just grow like that out of the blue. And there's a reason that they were last year's highest performing asset class. Now, this year, we started out very strong. We hit new record highs, but with the turmoil in the markets and the war in Iran, we've seen a pullback and consolidation. And so we'll talk about that as well. If you were with me on our last webinar last month, I let you know that gold had pulled back to about $4,000 an ounce and silver had pulled back to the mid 50s. And I told you that this put us in the perfect position for entry into the market. And lo and behold, the market is now moving back up. We feel that the bottom has been put in just over the last week and a half. We've seen some good recovery start. Gold is up about 12% higher and silver's up about 21% so far. And I wasn't the only one saying that, obviously. We had a Wall Street Journal article that got ran, and it said that gold went through a major correction after a huge run-up. It sold off roughly 22% from the beginning of the Iran conflict. And that sounds strange because war and uncertainty are normally supposed to help gold, but a temporary price drop doesn't really mean that there's a change in the long-term reasons why people are owning gold. And so gold can still be used as protection against inflation, against war, against financial trouble and government debt and uncertainty. And the reason that people were buying it in the first place didn't disappear at all, even though the market came down a bit. And they argue that this was the best time to buy the dip, and they were very right about that. Now, what's worth noting is we're still just slowly starting to ease back up in the price. And so if you've been on the sidelines and you're wondering about gold and silver, this is still a great time to make that move. And I'm just very glad that you're joining us to learn about this. Now, billionaire investor John Paulson believes that the gold rally is still in the early stages. His argument is that people and governments are gradually becoming less comfortable holding all their wealth in just paper currencies. And he sees confidence in government currencies weakening in many parts of the world, and he believes that gold still has years of potential ahead of it. And so when you look at some of the larger economists and analysts and investors that are in the market right now, and they're talking about getting into gold and silver and the promise of where gold and silver are headed, that's something that we want to pay attention to. So I'm going to set the stage for the economy a little bit, just so you understand where we're at. The economy only grew about 1.5% annualized in quarter two of 2026. So we just had this economic report come out. It was much lower than what we expected. Economists were expecting around 2.1%. And so growth, therefore, came in noticeably weaker than what they were hoping for. Now, the economy is still growing, but it's growing slowly. And economists are declaring, we're not saying America's in a depression. We're just saying that the economy has clearly lost some significant speed that it had before. Now, when you couple that with the other concerns, as we approach this slowdown in the economy and we look at the other risks on the table, recession fears are all too real. And in fact, without AI data centers that we've been building, the economic growth was almost entirely zero in the US. And so this gives credence to the thought that we're in a massive AI-driven bubble right now across most asset classes, and that includes our economic growth. We had the Harvard economist Jason Furman. He calculated that without technology and data center investment, U.S. economic growth in the first half of 2025 would have been just 0.1% annualized, right? Information processing equipment and software were only about 4% of our GDP, and yet they accounted for roughly 92% of GDP growth during that period. So a very small sector, a small amount of spending. 1% of our GDP is the data center side of that, and it's driving almost 100% of the growth. So the economy looked stronger than it really was because AI companies were spending enormous amounts of money building data centers, which generated almost zero revenue themselves, right? So there's a big problem there. GDP looks inflated because money's being spent, but the return on that money is almost nothing. And so if you take away the AI building boom, then a huge portion of the economic growth disappears. Now, legendary investor Ray Dalio compares parts of today's AI boom with earlier investment bubbles like the dot-com bubble and 08-09 great financial crisis. And he says AI itself can be revolutionary and still produce investment bubbles as hype and spending get out of hand with no revenue or return establishing credible valuations. So essentially, when you look at all the spending that's going into AI, all of the stock market that's been pushed up because of that spending, and there's no return on it, that's what's called a bubble, right? We're in the largest bubble in American history, and I'll talk about that in more detail as we go forward here. But what I really want you to hear out of this is there's tremendous risk getting built into the economy and the stock market because of this. And if these investments they're building in AI, the data centers, if they don't return a huge ROI for their investors, then all of a sudden that money that's been put into it that's propping this up goes away. And that spells disaster for the economy, for the market, for our investments, and that's really what most people are concerned about right now. European central bank economists are also recently warning that the U.S. technology stocks could experience a significant correction. And their concern, again, doesn't mean that AI won't succeed. There's all this excitement around where AI is going to go and how it's going to revolutionize the world. But their point is that investors can become too optimistic and pay too much for great companies. And AI can still change the world, and AI stocks can still become overpriced at the same time. So both things can be true at once, but if the AI bubble bursts, the whole economy could easily come down with it. Now, JP Morgan CEO Jamie Dimon, probably one of the most respected men on Wall Street, he said he was not bullish on stocks at the current prices, and he also said he wouldn't buy long-term U.S. Treasury bonds at the current levels. So we have stocks, which are what we're all familiar with. We have treasuries and bonds, which are the safe haven de facto investment the world over. And the most respected man on Wall Street is saying, I wouldn't touch either of those right now. He's basically saying stocks look expensive, bonds don't look especially attractive, and inflation is still a major problem. And when the CEO of America's largest bank says he won't be buying stocks or long-term government bonds at these prices, it's reasonable to then ask, where can I diversify outside of those two places? And so if you look across the horizon, many investors may be acting like everything is fine. There's money flowing into the market, but there's plenty of risks underneath the surface. And sometimes the time to buy insurance is when nobody thinks they need it. You want the insurance for your wealth before there's a disaster. And that's the warning signs that are coming out right now. Now, gold and silver just had their best week in 7 months. And when the economy starts looking weaker and the dollar softened, investors moved quickly back towards gold and silver. And so we're seeing the market turn back around for precious metals right now. It's a very good sign of health. And then you look at central banks, they're continuing to buy. In fact, 96% of central banks around the world are buying gold right now. They're buying record amounts of gold. They've done so for 6 years in a row. And of them, nearly 20% of those banks are decreasing their exposure to the US dollar. And the dollar is the only currency that they're actually decreasing their exposure to. Now, the people managing money for entire nations and countries are buying gold, and they're buying silver right now as well because they want insurance against inflation. They want insurance against debt and uncertainty. And look, central banks aren't gold bugs. They're professional risk managers. Countries are buying gold because the world feels less predictable and they don't want all their eggs in the dollar basket. And so if they're doing it, what should we be doing? And that's the question I want you to ask yourself. If the largest investors in the world are looking to precious metals, they're buying physical, tangible gold and silver, not just on paper, but real wealth, what are they concerned about? What do they know that we don't necessarily see? And shouldn't we be doing the same thing? And here's one of the main reasons. The U.S. national debt just officially crossed $40 trillion on August 19th. The national debt has more than doubled in less than a decade. And of course, it's climbing higher. And it's climbing at a seemingly unstoppable pace right now. We're expected to cross about $50 trillion in just 3 years. Think about that. These numbers are absolutely insane. We couldn't even fathom $1 trillion 30 years ago. Now, that's all we hear about, trillions and trillions and trillions, and our debt is just ballooning. Now, interest payments on that debt alone are the government's second largest expense, just behind defense spending. So America owes $40 trillion, and it's borrowing more almost every day. And the scariest part about this isn't just the debt and that number, it's the growing amount of money that's required just to pay the interest on that debt that we hold. Think about it like carrying a giant credit card balance and using more borrowed money every year without ever paying down your balance. That's called a disaster. It's the very currency crisis that Ray Dalio and Jamie Dimon and others are warning Americans about, that the dollar is really on the precipice of completely crashing because of the debt burden. And let's just drive this home really simply before we move on. How do you actually invest into gold and silver and diversify? What I want you to understand is that the dollar is not where we can have our money. The dollar is in significant decline. It just experienced the worst year in 52 years. It dropped over 11% last year alone. So your purchasing power on the dollars that you hold, the dollars that you're earning as you go to work every single day, that's losing 11% per year. We have massive money printing from our government. In fact, over 80% of all US dollars in existence have been created since 2006. And in 2006, we had about $6.8 trillion floating around as the money supply. Today, that's ballooned to over $23 trillion. So when we're printing money and 80% of every single dollar has been printed in the last 20 years, where are we headed? And we see inflation that's also running up. Part of that is due to the war in Iran, which has caused oil and gas prices to spike, and that makes all goods cost more. But also the money printing that our government is doing, the increase in money supply, it's causing prices to rise substantially. And we've been battling inflation for the last 5 years in the US. Now, interest rates on treasuries and bonds, which again are usually the place that we go to for safety, they're not even keeping up with that inflation right now. And so again, what used to be the de facto safe haven investment the world over is no longer even yielding a positive return when you account for that devaluation. The dollar's in a real troubling spot here. As central banks are loading up on gold instead of the dollar, that puts further pressure on the dollar to drop. And gold actually replaced the dollar as the number one reserve asset in central bank balance sheets just last year. So we're right in the middle of a precious metals bull market, and we're still very, very early. And we can look at the stock market, which is really on the other side of this as well. Again, we're all comfortable and familiar with the stock market to some degree. The stock market is currently the most overvalued it's been in U.S. history by nearly every single measure that economists look at. The average stock is trading 535% greater than what its book value is. And in 1929, just before the Great Depression, that value is around 400%. So we're actually more overvalued today than during the Great Depression. And we have things like the Buffett indicator, which is the total stock market value compared to the total GDP of a country. We're currently at 237%, which means our stock market for US is 237% greater than what our country is producing. Anything over about 120% is in the danger zone. Think about how overvalued we are right now. The price to earnings ratio is hovering around 22 times, and the long-term historical average is about 17. And then we have the Shiller-Cape ratio, which is kind of the cyclically adjusted price to earnings. This ratio averages the S&P earnings over the last 10 years. And when you adjust that for inflation, that's the number that you get. And it's currently hovering around 41, which is 27% above its long-term historical average of 32. And then it's drastically higher than its 17 historical median. So every condition we look at, every figure that economists use to calculate the market is saying that we're incredibly overvalued. And these numbers aren't justifiable, right? They're figures that have only appeared one other time in history, and that was just before the dot-com collapse. So if your warning bells aren't ringing, they need to be. The stock market in context is running one of the largest bubbles in American history. All of the growth is coming from tech and AI, it's speculation, and there's serious issues there. And we're in an incredibly volatile season as well. Many experts are expecting a huge crash. We have John Hussman, who believes in the market is really the most speculative extreme in U.S. financial history. Again, similar to 1929 and the 2000 tech bubble. And he warns that the S&P could face a decline of anywhere between 55 to 75%. Gary Shilling, again, legendary economist, is warning that a major recession is almost inevitable and potentially dragging the S&P 500 down by 30% or more. And he's citing weak consumer support, a lack of capital spending. Those are the primary catalysts. So as Americans continue to run out of money with inflation going up, there's less money to prop up that bubble, and eventually it all comes down. Jim Rogers, again, author and investor, he predicts an inevitable, devastating global financial crisis driven by unsustainable global debt and a concentrated AI bubble. And Jeremy Grantham warns that the U.S. stock market is the biggest investment bubble in American history, and it faces a potential 70% peak to trough collapse, and he wouldn't be in stocks at all right now. So I'm just throwing these names at you. These are legendary investors. They're hedge fund managers. They're economists. They're doctors. They're saying that this is what they're seeing, and it's really one accord. They're all saying the exact same thing. Bubble in the market, largest bubble in American history, danger across the board, get out of stocks. So I don't know about you, but when I'm reading this day in and day out, and I'm seeing the concern that our clients have, again, that gives me pause, and that's the very reason that people are looking at precious metals. And as stated before, Jamie Dimon warns that a severe, unexpected market shock is building below the surface right now. He likens it to tectonic plates. It leads him to completely avoid buying the broader stock market or long-term U.S. treasuries at the current valuations. And he cautions that while the current economy looks highly resilient on paper, again, it's still growing, investors are significantly underestimating a brewing confluence of fiscal and geopolitical triggers. So here's the head of the largest bank in the world, again, essentially saying that he wouldn't touch stocks or bonds right now. And we know that we can't be in cash. And so again, what is the common sense play? And again, that is precious metals. And gold was up 64% last year, silver up 142%. This year, we saw new record highs. And then a normal correction, part of a healthy bull run is 2 steps forward, 1 step back, a period of consolidation before that market can resume. And it sure looks like the bottom is in. So there's a little bit of unpredictability still. The war in Iran is still causing inflation to spike. That's causing some trouble, and the market has been fluctuating. But either way, gold and silver wins. If the Fed cuts rates, then gold and silver thrive in a low interest rate environment. If the Fed raises rates, we'll face a debt crisis, further pressure on our government debt and the dollar, an economic crash as the economy tightens up, and gold and silver shine in that environment as well. So everywhere we look, gold and silver really become the victor in that scenario, and that's why so many people are moving into it right now. There's temporary strength in the dollar right now, but it's all very short term. And so again, I just really want to impress upon you, the market is giving us a break before resuming back up. And we're in a very good position to get into gold and silver. Again, gold around the mid 4,000s right now, silver mid 60s. This is a great entry point into it. And just to canvas some of the projections on gold, so again, it's not just me telling you gold and silver are goodbye. We have Goldman Sachs saying nearly $5,000 an ounce on gold by the end of 2026. Bank of America sees gold back at 4,800 by Q4. Morgan Stanley says 5,200. UBS says 5,200. Deutsche Bank, 4,900 by Q4. Again, all of these banks are really of one accord. Gold is going back up. They're projecting about a 20 to 30% gain in gold this year alone. That's a very safe, stable return on investment in an asset that you can trust. And so again, this is the time to get in. And that said, you're not early, right? We've seen good growth on gold and silver, but you're certainly not late. I'd say that you're right on time. And so we're going to talk about now how you can get into precious metals. And again, I just want to remind you, at any point in time, if this is resonating with you, call us at 866-607-2447. We can discuss all this with you in more detail. We can also talk about your personal situation, get right to the heart of what you're looking at doing. We have our account executives on standby waiting to help. And so feel free to just call us directly now. Get right into it. We'll get you a replay of the webinar. You can kind of see the rest of what I'm going to say here. But if you know that this is a move you want to make, just jump right on the phones with us and take that step. And I'll walk you through the hows now. Again, how can you invest into precious metals? But while I go through this section, what I really want to leave you with here is if you have anything that popped up as I was going through that first section, the concerns in the market, what we're seeing in the economy, why gold and silver, and you have some unanswered questions, go ahead and leave that, because after I talk to you about how you can invest into gold and silver, we're going to get into your questions. And I just want to make sure that I answer everything that maybe got left off the table here, or I can dig in a little bit further for you. So let's talk about the how, right? There's two ways that we at American Hartford Gold help our clients invest into gold and silver. We have the cash side of things, which is anything outside of a qualified retirement account. So brokerage account, money that's in a CD, money that's just sitting in your checking or savings. This is the cash side of things. And we can ship gold and silver right to your door. Everything that we do is physical, tangible gold and silver. It's real. You know, you can get it in your hands, and you would just do a wire transfer or a check over to American Hartford Gold. So if you have a certain amount of money that you want to test or get into the market, you call us up. We'll build out a 7-digit client ID with you. We'll get you all the details of how to get the funds over to American Hartford. And again, you can do a wire transfer right from your bank, or you can do a personal check, cashier's check, whatever it may be. We'll set that up for you. We get the funds in on our side. We call you up. One of our directors goes through a full consultation with you. We get to know what's important to you, your investment objectives, your time horizon, your liquidity needs. We'll give you a good lay of the land. We never expect you to become a precious metals expert overnight, but education is important. We want you to have a good sense of things, and you're going to be in very capable hands. We'll build out a portfolio of precious metals for you, and then we'll ship that gold and silver right to your door. It's fully insured. We cover the shipping cost. There's no sales tax. You'll sign for it upon delivery. We usually ship via FedEx in an unmarked package, so nothing says gold or silver on the box. And again, we've shipped billions of dollars worth of gold and silver around the country this way. It's very straightforward. It's a tried and true process. There's no liability to your side. You'll sign for it. You take delivery. You have that gold and silver on hand, and you can do anything you want with it from there. We do have a buyback commitment to our clients. So a lot of clients ask me, okay, I get the gold and silver. I'm watching it grow, but then how do I get out of it? How do I realize my investment? And it's kind of funny because a lot of people say, well, I can't just take gold to the grocery store. And that's absolutely right. You're not trying to take gold to the grocery store. You can't take your stocks to the grocery store either. This is an investment. It's protection. It's wealth preservation. You get into gold and silver, which is real money. It's growing in this environment. And whenever you want to realize that growth, whenever you want to get back into the dollar to spend your money or to change investments, we have that buyback commitment. So you call us up. Machi, I have this wealth. I have this gold and silver. I want to get back into cash. What we'll do is send FedEx to your home with packing material and a shipping label. You'll box up whatever metals you want to send back over to us. They'll overnight it. We'll wire funds into your bank account by Friday. It's very straightforward, very liquid. You're not stuck in metals. This is the best place you can have your money off to the side, protecting and preserving while the market's coming down, while the dollar's coming down, while gold and silver are growing. And it's so easy to get back into cash, so you're not stuck by any means. And again, we have that commitment to you as our client to have that two-way marketplace. So very important to realize on that side. Now, one other thing on the cash end, a lot of our clients want to have metals in hand. There's something about holding your wealth and actually owning something real and tangible. But if you don't feel comfortable having gold and silver at your home, we can set up personal storage for you. There's a handful of private depositories around the country that we work with. They're all fully insured. They're vetted. They've been around for decades and decades. Great companies to work with. And you can actually have your gold and silver stored there if you don't feel comfortable having it at home. And again, if that's of interest to you, just talk to our account executives. We'll walk you through that process. That's the cash side. Retirement account side is the other end. And again, I mentioned earlier on that most of our clients have the majority of their net worth tied up in old 401ks or IRAs. It's just we make money at our work. We put it into a retirement account. It's this automated process, and we don't realize the risk that that's facing as it's entirely in paper-based assets. You're probably fully exposed to the stock market, the bond market, the very things that Jamie Dimon is saying he wouldn't be in right now. And if you want to get gold and silver into your retirement account, it is physical, it is tangible, you actually own it. But what we do is we open up what's called a self-directed IRA. So this is just a quick application on our side. It takes 5 minutes. We do it with you over the phone. We open up an account at a company called Equity Trust. They're the oldest and largest self-directed IRA firm in the US. Great company to work with. They will have your custodial account opened up over there. We have an entire back office dedicated to helping you move funds out of your retirement account into the self-directed IRA. So we'll schedule a custodial call. We'll call over to where your account currently is, and we'll help you liquidate the funds, move over whatever amount that you want to get protected, and get it into the new self-directed IRA. Now, once the funds are there, again, we'll call you up. You'll talk to one of our directors. We'll go through a full consultation. We'll get to know what's important to you, your time horizon, your liquidity needs, what you really want out of your retirement account, and we'll build out a portfolio of physical, tangible gold and silver that we then ship to a private depository. So inside of an IRA, it can't be sent to your home. It has to be stored for you safely and securely. These depositories, they're third-party accounts. They're outside of the banking system. You own that gold and silver. It's actually physically sitting in a room with your name on it. Nobody else has claim to it. It's yours. It just has to be stored for you safely and securely. These vaults, again, fully insured. They're backed by Lloyd's of London, typically up to $1 billion per account holder. So there's very little limited liability on your side. They're stored safely and securely. They're under lock and key, armed guards, the whole 9 yards, and insured. So it's probably the best place that you could possibly have your wealth. And at any point in time, if you want to sell metals out of that account, we'll buy back. If you want to pull the metals out and take a distribution, it is yours, so you can take it to your home. They just consider it a distribution on your retirement account. You will pay taxes on it if it's in a traditional IRA. If it's a Roth, you can pull the metals out anytime, no taxes. It works the exact same as your current accounts do. They're just a self-directed IRA. So it's still the retirement structure. It's still 59.5 before you can pull that out penalty-free. And it is still going to have the same tax implications, so nothing changes. And when we move funds out of your current custodial account into the self-directed IRA, it's a tax-free, penalty-free rollover. It's incredibly simple. And just to kind of break that down one more time, you've got a retirement account, you want gold and silver in it, you call us up, we build out an application, we move funds over, we build out a portfolio of gold and silver. That's it. You own it, and you're actually protecting yourself inside that account. So very straightforward on that side. The cost for storage, it's a flat fee. It's roughly $250 a year. That covers everything for the custodial fees and the storage. It doesn't matter how much gold or silver you have in there. You can have 10,000, you can have 30 million. It's a flat fee when it's inside that retirement account. So it's very, very moderate and very easy to do. And we set it up in a simple phone call. The types of accounts that are eligible for that. And again, if you have a retirement account, if you're concerned about the economy, you want to get some risk off the table, just call that number 866-607-2447, and we'll take a look at your actual account and make sure that you can move it over. But if you have an old retirement account from an employer, whether that be a 401k, 457, 403b, so this was a previous employer and the account sitting there, that's almost entirely eligible. Regardless of your age, regardless of anything else, you can move that over. If you have a retirement account like an IRA, whether that be a traditional or a Roth that you've set up, those funds can be moved over, no problem. If you have a current employer account, so you're currently employed and you're actively contributing to a 401k or a 403b or a 457, those accounts get a little bit tricky. If you're over 59.5, you can almost always move that over. If you're still employed and you're below 59.5, Sometimes they lock up those accounts. So again, if you have any questions about that and you want us to take a look at it, just call the number and we'll actually get into your situation and figure out what we can do. Again, we'll vet everything before we move the funds. We'll ensure that it's tax-free and penalty-free. No issues there. It's incredibly simple. And what I really want you to pull away from this part of it is whether you have cash at home, in the bank, in a CD, or in a brokerage, or you have the retirement accounts, if you have concerns about what we've been talking about, where the economy is headed, you see the devaluation of the dollar, you're looking to get some risk off the table, there's just no better place to be than physical gold and silver, in our opinion. And now is the time to get into it. So just take the next step and give us a call and let us actually help you put some of your fears to ease and get some real protection and hedge in your account. It's incredibly important that you don't just sit here on the webinar and learn, but that you actually take some steps to make those changes if you have the concerns. Now, I'm going to get into your section with the questions. That's really important that I kind of canvass all that with you. But why American Hartford Gold? Look, we're the largest precious metals dealer in the U.S. We've got the best reputation in the industry. We've shipped over $4 or $5 billion worth of precious metals around the country just in the last couple of years. We've been in business for over a decade. And I'd encourage you all to visit our About Us page. You can see our welcome video. In that, you see our president, our CEO, our shipping department, our back office, our sales reps. You can see everybody in our company and really get a good sense of who you're partnering with and who you're going to be working with in this. And if you're making a move into precious metals, you want to go with the name brand in gold and silver. Again, we're the only firm in the industry backed by private equity. And where that's important is we buy back from all of our clients, regardless of what's going on in the economy, the markets. You're never going to be refused to sell your metals back to us. We're always going to have enough cash to be able to do that, to provide that two-way marketplace. Smaller companies can't say the same thing. We've liquidated hundreds of millions of dollars for our clients. And that's really important that when you're getting into metals and they're going up, and if everybody else wants to sell at the same time, you know that we're just a phone call away. We'll help you get back into cash. We've won plenty of accolades over the last handful of years. We have a full service team dedicated to making this a very smooth, easy transition for you, both into gold and silver and out of gold and silver. A+ rating with the Better Business Bureau, Consumer Affairs, Trustpilot, Google, thousands of positive reviews. And I can't stress enough that we're just here to give you the easiest and smoothest process possible with getting into physical, tangible gold and silver, getting out of the dollar, getting out of your current investments that you're concerned about into something that's going to give you confidence and comfort. And then, of course, getting back into cash when you're ready. It's a very easy process. And we really pride ourselves on education, on making sure our clients are very comfortable and fully educated from start to finish. And that's part of why we're doing these webinars. So if you're looking at this, if you're serious about it, you're just not going to find a better company than American Hartford Gold. And we'd love for the opportunity to prove that to you and get you well taken care of. So I'm going to get into some of the questions that you have. So again, just kind of continue to write those as we go, and then we'll wrap it up. We want to make sure that we're somewhat tidy and prompt on these, but I also want to make sure that we address everything that's important to you. So quite a few questions, which is great. Thank you guys for writing that. Peter says, I have a considerable amount in gold and silver through your company in a self-directed IRA. That's fantastic. Again, Peter, sometimes there's changes in the market as well. So if you have questions on that, you ever need to lean on us, that's what we're here for. We're just a phone call away. Mike says, do you think we'll hit higher numbers this time next year? You're talking about gold and silver in general. Again, every voice that we're looking at, every analyst, every economist is saying basically in unison that gold and silver are going much, much higher, that we're just the very beginning of this bull market. I would say that we're still in the second or third inning of about a 9-inning game overall. There's a lot of runway up ahead for metals to keep growing. Is physical gold better than an ETF? So ETFs are just exchange traded funds. They're a stock that's holding gold and silver, supposedly backing it. And you can invest into this company's holdings and basically take advantage of the price action on gold and silver. Physical gold and silver are entirely different. If you're concerned about the dollar, gold and silver on the physical side is the only place to be. The dollar is losing value. Having your money in a dollar-based asset like an exchange-traded fund, you're not only taking other people's liability if their company goes down, if there's incredible volatility in the markets and they're selling off, you're getting all that fluctuation of Wall Street. Whereas if you own this, you're taking advantage of the physical demand and supply on gold and silver, which right now, again, people are getting into this because they're concerned about where the dollar's headed and they're concerned about the volatility in the stock market. So maybe the last thing you want to do is put your money back into a stock, even if it's a gold stock, even if it's supposed to track the gold price. That's all the manipulation of Wall Street on that end. Whereas this gives you real physical, tangible gold and silver, and you take advantage of supply and demand on that side. So it's almost two different markets, right? There's nothing better than real wealth in your hand that you can hold, that you can touch, and it's nobody else's liability. It's not just a dollar-based asset. This is priced globally. So if the dollar goes down, you still have wealth here. Whereas if a fund goes down, you're based in the dollar, you're fully exposed to that. So I hope that answers your question. If you're looking for just a quick trade into gold and silver, ETF is fine. If you're looking for real preservation, real stability, real wealth outside of a system that's showing us that it's failing, gold and silver on the physical side are unmatched. What is a good percentage of metals to hold in a portfolio? Great question, Doug. In a normal environment, you would typically hear something like 15 to 20% of your portfolio into gold and silver. What I'd really push into here is this a normal environment? Goldman Sachs is saying anywhere between 30 to 35% of portfolio into gold and silver. They're calling gold their best, highest conviction play right now because of where gold's headed. So when you look at gold and silver far outperforming your other investments, why wouldn't you have more of your money and more of your wealth in a stable, safe asset that's going up as opposed to taking the risk of the stock market where it's the highest bubble in American history? It's a question you have to ask yourself. If you put 20% of your wealth in gold and silver and 80% of your wealth is exposed to a system you're trying to protect yourself from, and that system drops, did you really protect yourself? So what's a good hedge for you? What's going to help you sleep easy at night? And again, if gold did 64% last year and silver grew by 142% last year, and the stock market did 12 or 13%, where would you rather be? This is providing safety and stability and growth. Stock market's providing growth, but it's providing a tremendous amount of risk. So I would just ask you to really think through, where do you want to have your wealth? Where do you feel most comfortable? And again, call us and we can talk to you about your situation, what may be best for you, and help you make that move. Will the government try to seize metals? Look, government can do anything they want to. I can't tell you they will or won't. I can tell you that we're in a very pro-metals regime right now. Donald Trump loves gold. He imported 600 tons of gold at the start of his administration. Secretary of Treasury Scott Bessent said, gold is my number one holding in my portfolio. I think that every American should have it. It's a real basis of wealth, and it's going to do very well in the future. There's no need for the government to confiscate your gold or silver. All that would do is create disruption, create chaos, right? When they did this in the 1930s, gold was the currency. People were spending this at stores and in bars. You can't do that today. They wanted to get gold and silver out of the system, convert us to a paper-based system, which they did. And now gold and silver is not money. It's an asset. It's an investment. There's no need for the government to confiscate it. So I hope that you see that that's really the safest place we can be. What's probably more realistic is the paper dollar eventually will go away and will convert to something digital. That's the concern. This is where you have safety. Could you please compare pros and cons between investing into gold and silver and investing in Bitcoin? Well, look, Bitcoin, Christina, is incredibly speculative. We get huge returns there, but huge pullbacks. Bitcoin's known to drop 80% at the end of its cycle. It's an untested investment. We do see crypto getting a little bit of attention and buzz in the media, but governments don't like Bitcoin. They don't like cryptocurrency typically because it's pulling away from their usable system. Gold and silver, again, is tried and true. It's nobody else's risk. You're not tied to the internet. If the power goes out, you still have your money on hand. It's tangible, right? And it's much more stable. And again, we have 6,000 years of recorded history on this, whereas Bitcoin is going into its, not even second decade, right? So what I would really say here is if you want speculation, great, look at crypto, have a little bit in there. That's perfect. But if you're looking for wealth preservation, this is where you want to have your money. It's been around, it's tested, it's the de facto safe haven investment the world over, right? What is the difference between having gold and silver in hand compared to gold and silver in an IRA? Tony, nothing. It's just where it's stored. If you have gold and silver in hand, it's at your house. If you have gold and silver in an IRA, it's stored at a private depository. It's the same gold and silver, whether I have it in my hand or whether it's stored. I still have claim to it. Nobody else does if it's in that retirement account. At any point in time after 59 and a half, if I want to get my metal sent to me, it's mine. I can do it. Nobody's going to say no to that. You just pay taxes coming out like as if you sold your stock and took out cash. It's just where do you have the majority of your wealth? Where do you want that preservation? And where do you want to get the risk off the table? Most of our clients do both cash and retirement accounts. So they have some gold and silver in their hands, but they've also protected their retirement account. And I think that's incredibly important to consider both options. Mike, is palladium a good investment? So yeah, I mean, look, precious metals in general are in a bull run. All metals are going up, gold, silver, platinum, and palladium. The one thing I would tell you, and we can get into more specifics if you call us, we lean on gold for preservation and we lean on silver for growth. And then you've got platinum and palladium, which are just current ancillary further diversifiers. They can do really well, but there's not great thriving retail markets for those two metals, whereas gold and silver have the majority of the market share. So you're pretty safe going with just these two. But if you want to further diversify, you can get some really great opportunities in platinum and palladium as well. And again, we'll talk to you about where they're at, what the market conditions are, and what might be best for what you're actually trying to accomplish there. Last question before I kind of move on and we'll wrap this up, unless you guys have anything else that pops up. Why doesn't the gold and silver, why doesn't it come with a certificate of authenticity? So the mints are just producing these assets. We're buying directly from the mints and distributors, and this gets shipped right out to you. It'd basically be impossible to have a certificate with every single item. And so the mints only reserve that for basically commemorative coins, which are very low mintage and kind of a special release, or they do it with proof sets, which are specialty struck. With these, it's just your general investing gold and silver, and they're not going to come with a certificate. That's why it's so important you go with a company that you trust, that you've validated, that's been in the industry for a long time, that's working directly with the mints and distributors, that you know that you're getting an official asset, and that it's not going to be something off of eBay that anybody can counterfeit. And with that, coins are always going to be a lot more easy to validate as opposed to bars. And so a lot of investors prefer coins. Again, that's probably reserved for another conversation, but you go with the company you trust. You go with the company that's been in business for over a decade. You go with the company that has thousands of positive reviews. When the gold and silver get shipped to the depositories, they get tested. We wouldn't be in business if we weren't shipping real, tangible, physical, authentic gold and silver. And so you know that you're in good hands when you come with American Hartford Gold. And maybe just one more here. Can I visit the depository to actually see and touch my metals? Yeah, absolutely, Kenny. That's a great question. You actually can go to the depository. You set that up through your custodian, which is Equity Trust. That's where we open up the self-directed IRA. They will let you go to the depository. The depository will pull your metals out. You can go into a room and pick it up and feel it, get the gold and silver in your hand, and know that you actually own it. Again, it's nobody else's asset. It's yours. It's just stored safely and securely to remain in that retirement structure, because the minute you pull it out, it's no longer in your retirement account, and therefore it has to be taxed. So to avoid that taxation, to avoid early withdrawal penalties out of your IRA, it's got to be stored for you. But after 59 and a half, you want your metals, no problem, pull them out, it's yours. And I can't stress that enough. A lot of people say if you don't have it in your hands, it's not real. That's not true with the IRA. It's physical, tangible gold and silver. And again, nobody else has claim to it but you. So very important to realize that you can actually own the metals in your account. And it's so important to get it protected if that's what you want to do. Before I run on here, so the biggest thing that I want to press upon you, again, is you're just at the perfect environment to get into precious metals. Why is it so important to own gold and silver right now? We're in one of the most dangerous times in American history for investing. We're all experiencing what economists are calling the everything bubble, with almost all asset classes feeling incredibly overinflated due to too much government money printing and debt that's floating around. It's propping everything up to unrealistic levels. And then furthermore, there's this hype and euphoria that's floating around with AI and tech stocks, and it's far surpassed and exceeded the realistic valuations and returns of these companies. So when we look at the stock market, it's just sheer speculation and gambling at this point. And we watch Wall Street just turn into a complete virtual casino. Is that where you want to have your retirement account? The place that you're supposed to have stability, the place that you've worked your entire life to build up this nest egg, working day in and day out, putting your money, and now you see it turning into a casino with valuations far exceeding what the real value of a company is. Is that where you want to have your money? Everything you're currently invested in, furthermore, is tied to the US dollar. And it's somehow tied precariously to this overvalued hype as well. And so everything that we have is priced in dollars, whether that be the stock market, cash, CDs, bonds, all of this is dollar-based. And we've printed over 40% of all the dollars in circulation with the last decade, 80% in the last 25 years. Our government has become a money printing machine where trillions of dollars, again, used to be an unfathomable figure in recent memory, and now we have $40 trillion of debt that's piling up. If we were a business, we'd be completely bankrupt, and yet somehow our government keeps going. And as the government prints money and racks up debt, the purchasing power of our dollar declines, and so too does the confidence in that dollar-based system. So gold and silver are outside of that. Americans are waking up month after month with all of our dollars purchasing less and less as inflation and spending creep up and the dollar continues to devalue. And so now is the time to protect yourself. And you do that by buying gold and silver, which again are inversely related to the devaluing dollar. As the dollar goes down, gold and silver go up in value. That's why gold can do silver can do 142% in a year. Gold can do 64% in a year. It's because the dollar is crashing and there's real inherent risk there. Gold and silver are a global asset. They're not just priced in the dollar. They're real wealth, and they act as a hedge against that devaluation. The government is deeply in debt. Families right now are stretched. Borrowing costs are high. Inflation hasn't completely gone away, nor will it. The economy is slowing. Stocks are incredibly expensive in many areas, and the world is politically unstable. And meanwhile, central banks are buying gold and reducing their dependence on the dollar. Billionaire hedge fund managers and bank CEOs are saying to buy precious metals. Do what the smart money is doing. Get a hedge with gold and silver because nobody knows what happens next. And that's exactly why more investors are looking at gold and silver as insurance rather than trying to predict the future. So if you're concerned about where the market's at, if you're concerned about the overvaluation, if you see the dollar actively losing value, why wouldn't you actually take a step and get real, tangible gold and silver into your hands so that you have wealth that nobody can take from you, that's not subjected to hype or speculation, that's actually been tried and true for 6,000 years of recorded history. If you want real money, this is it. And there's no better place to get this than American Hartford Gold. And I just want to thank you guys for joining us today. It's always a pleasure to bring these to you. I hope that this was informative, but I can't stress enough, actually call us now. You've made it through the webinar. You obviously have interest. Don't let another month go by. Don't let another week go by. Don't let another day go by. Actually take the action to get some protection and get that risk off the table and diversify your portfolio into something that's real. So call us 866-607-2447. I'm Machi Block with American Hartford Gold. Give us a call and let us actually help you out here. Take that step. You're going to sleep much easier at night knowing that you have something that's real.